Folks, today I'm going to give you a good understanding of where we stand. A lot of people are confused right now. They don't know if we should be looking at Biden stocks, if we should be looking at Trump stocks. Here's what I say. Don't look at either. Look at the market. Let the stocks tell you which ones you should be looking at. Don't let politics predict which way you should be facing right now. The best way to predict which stocks are going to move is by actually looking at the stocks. So let me give you a little update of what the market is really focused on right now, and give you some stocks that I'm really looking at right now, and I'm getting a little excited about. So again, let's forget about the politics. The president, whoever the president is going to be, or whoever the president is, it doesn't matter at this point, because I believe that COVID is what really set the tone beginning of the year. And that's what the market is basing itself on right now. The election happens once every 4 years. This COVID thing is one of the biggest things that's happened over the last, probably the last 50 years, 60 years. So again, I think the impact, the interest rates, the central banks, the Fed, all of these things that we've been seeing are setting the tone, and they are a lot bigger than the election itself. Now, with that in mind, we just had earnings. We are done with about 470 out of 500 S&P stocks, or about 93% to be exact. So far, as of yesterday, today's Tuesday, as of yesterday, about 85% of these stocks have beaten earnings per share, and 75% beat revenue. Now, don't get too excited, because we all know that these numbers have been revised lower now over the past 2 quarters, almost 3 quarters. So they're not beating these numbers because they're doing so much better. They're beating these numbers because the numbers were revised so much lower. But it's very, very positive that we are beating estimates. Very, very positive. Total earnings for the 464 members that have reported so far, they're down about 9% on 2.1% lower revenue. And looking at the third quarter as a whole, we're looking to be down about 8.5% on about 1.3 lower revenue, with tech doing particularly better. Most importantly, and this is the most important part because the market discounts what's known and always looks ahead, and this is really key, estimates are going higher for the fourth quarter. That's very, very, very important. For the second quarter, estimates were not going higher. For the third quarter, last quarter that just finished, estimates were going higher, and now they're going higher again for the next quarter. That means little by little we're getting out of this mess. It may take a little longer than usual, but we're getting out of this mess. Now, retail sales were doing pretty good the last 3 months. But it looks like they're still doing pretty good, but it looks like they're slowing down. Retail sales were up only 0.3 in October. Not that great. It looks like the economy really needs another dose of stimulus from either the Fed or the central bank, or both. But they're not doing that great. Walmart's earnings, and this is really important, and I would imagine that Walmart is a pretty fair or a pretty good representation of the overall economy. They're saying things are doing really well. People are buying things online. People are actually going into stores where they can, if not going online. They're booming right now, according to them. But they are slowing down, which is in line with what the retail sales numbers for this week is showing. So that's causing me to pause. I was expecting a really big Christmas, retail sales Christmas, but I'm pausing now because we're in November and holidays are about 3 weeks away, maybe less, about a month away, 3 weeks away, about a month away, say. Actually, no, what am I saying? We're Thanksgiving 2 weeks away. And with the slowdown, I don't know how that's going to reflect. But here is what I do know. The most important thing to do right now is not to think ahead 2-3 steps. The best way to see what's really cooking right now is to look at stocks making 90-day highs. And actually, that's what I want to do. Now, there's about 68, 70 stocks that have reasonably good liquidity, not just in the S&P, but all over, that are just thriving right now. And I think that by looking at the stocks that are thriving, we'll get a pretty good idea of what we should be looking at. So Uber's been going really, really well for the last year. It's been really outperforming the market. And if you look at the chart of Uber, you will see that the stock looks like it's about to go horizontally again and break out. But it broke out after basing for a long time. And what do I always say? The longer the range, the better the breakout. So it's going through a breakout. And if you go back a few years, you will see, not a few years, it hasn't been trading that long. It went all the way down, and we broke the high, and there's no stopping the stock. And I think it's going to go higher. Now, Uber's not the only one. Take a look at Lyft. They are literally trailing each other right now. And this one looks exactly the same way, except it's breaking out from a low instead of a high. So if I was a betting man, I would much better prefer Uber than Lyft right now. As a matter of fact, one idea, and again, I'm just throwing this out there, you may want to buy Uber and you may want to sell Lyft. Because again, one is just breaking above the 200-day moving average, and the other one is literally making all-time highs. So big factor there. Another industry that we're seeing a nice little pickup is this Canopy Growth. It's a marijuana stock. Take a look at this stock here. The stock is breaking out quite nicely. Now, if you look 2 years, it's only breaking up above the highs. Now, take a look at this one here. This is GRWG, Grow Generations. And this company, I believe, is a better business model. And if you look at this stock, it's making all-time highs. So you may want to buy GRWG and you may want to sell CGC. Not a bad little hedge there, right? So again, just wanted to kind of give you two sets of pairs. And I didn't intend to do this video by giving you pairs, but I'm just pointing out that Uber, Lyft, and CGC and Grow, Uber strong, Lyft kind of weak, GRWG kind of strong, Canopy kind of weak. So let's look at another stock. So I really like GRWG and I really like UBER if you're just going to go long. Gap has been killing it. They have done a great job of moving from traditional brick and mortar to online. The stock has been in the top 10 on my relative strength chart now for about 3 to 4 months. And again, I love the way it's breaking out, and I think price is going to go higher. So definitely Gap is a stock you want to take a look at. Another one, and this is a defensive stock, and I've talked about it, Tupperware, 90-day breakout. Really like this stock, especially if the stay-at-home thing starts up again and people don't go to restaurants. We're having closures right now. Winter season is here. We may see exactly what we saw last year. They're saying cases are getting worse. We're breaking out. Notice, moving higher, congesting. Looks like we're going to go higher. Again, I really like Tupperware. Next one, Costco. Again, consumer staples. Toilet paper is already in shortage. My wife's already stocking up on toilet paper again. Costco looks like it's going to be moving higher again. If you want defensive stocks, stay-at-home stocks, Tupperware and Costco. Another stock that looks to be rallying and making a breakout is WestRock Company. Don't know if you're familiar with this stock, but take a look at it. Wanted to bring it to your attention. Look at this stock, and if you wanted to see what they do, it's paper and packaging. Now remember, all of these vaccines that are going to be coming, and all these packages that are going to be coming via UPS, FedEx, and FedEx is another one of those stocks that I've been focused on. Take a look at it. People are going to be relying on packaging. I've been talking about it for 2 months. And WRK is a packaging company. And all those millions of vials of vaccines that are allegedly going to come to our house in the mail or to the doctor's office, they're going to need packaging. Packaging. Look at FedEx. It looks like it's ready to go up again. Love this company. And last but not least, Waters Company. So we got, and I'll review this. Let me just go through this one here. and I'll give you a quick review, give you something to work with. Take a look at this thing. Look at this stock. Took out the swing high. And if you look at the profile of the stock, it's in the healthcare, analytic laboratory, instruments and software for science. Very, very, very good upside potential. They do analytics. Very solid company. So again, if I was a betting man, I like Waters to the upside. Ticker symbol WAT. Love this stock. I really like WestRock stock. Very solid stock. I'm just kind of giving you a review of everything so you can get all the ticker symbols in case you don't want to review the video or whatnot. But ticker symbol is WRK, and you could see the stock here making, let's see, long-term chart. Interesting. Still under the 200 on a weekly, but boy, oh boy, it looks good right now. Really strong right now, and it looks like it's breaking up, almost ready to break out above the one-year high, which is pretty impressive in this market. Then we've got Costco, toilet paper, consumer staples. Next 3-4 months, definitely Costco. And as you can see, the stock is up almost 2% today. And again, just yesterday, my wife came to me and said, you know, there's talk on the neighborhood forum that there's a shortage of toilet paper. And I said, oh, here we go, Costco. Tupperware, people eating at home, microwaving foods themselves. Up 8% today. Don't say I didn't warn you. Gap. Man, the stock is Gap, and another was L Brands. That's another one. Those two, yeah, L Brands and Gap, those two. Take a look at this thing. Look at that. Nice little breakout, right? Then we got GRWG, and if you want to hedge it against something, CGC is a good hedge against this stock. But I like this stock as a long, because this works if the industry's growing, not one company. It's a multi-industry company. It's a B2B company, not a business-to-consumer company like most pot companies. So GRWG, I like that stock long, and I like, and again, if you want to short it with something, a companion stock, it's CGC. And another one, long, I like is Uber, and if you want to short Uber with something, Lyft is a good companion short. So for those, for the pot company and for the driving services, for the transports, I got you a hedge as well. I like Uber, but I'm not big on Lyft. And I like GRWG, but I'm not really big on CGC. So again, we gave you a good review of the market, told you not to worry too much about the election. It'll take care of itself. Retail sales, earnings are better. Retail sales are still good, but it looks like it's slowing down. It's causing me to pause on the retail stocks heading into holidays. And the stocks that I really like are Costco, WRK, Watt, WAT, Tupperware, TUP, Gap, GRP, GRWG, another one, and Uber. And I hope that helps.